Let's jump on to the next one, which is bonus depreciation. Similar to 179, another salient feature of depreciation introduced by IRS. IRS thought that when we are introducing these methods, the ideology is to demonstrate that they are wanting that small businesses should expand. They should not hesitate in making acquisitions for business equipments, personal property, so that they can advance their business and make money. So to support these kind of businesses, they are giving them the options to claim higher depreciation in the first year itself instead of waiting for the remainder years or the useful life of the asset. Similar to 179, bonus depreciation is optional in nature, not mandatory. It is applicable just as it is on both old and new, bought or finance. The tweak here is it is applicable on the assets having maker's depreciation method useful life up to 20 years. Matlab, if it means that if there is any asset as per the makers, the third one, it means that anything which has up to the useful life of 20 years as per makers, it can be eligible for bonus depreciation. The thing to be kept in mind is we have to follow the sequence. The first option is 179, second option is bonus, and the third option is maker's depreciation. We need to follow in sequence. We can opt out from 179, opt in for bonus and makers, or any of the two. Opt in for 179, opt out for bonus, and then follow the makers, or opt in for all. Again, similar to 179, bonus depreciation is not applicable to real property, including enlargement, elevators, and escalators. Also, it is not applicable if the SSE follows alternative depreciation system. We'll talk about it in the Baker's depreciation process. But yeah, just to give an idea, if SSE is following alternative depreciation system, it is not eligible to follow bonus depreciation. What kind of deduction is there? Is it the same like 179, 100%? No, not in 2023. But yes, until 2022, the SSE could claim 100% of the value of the asset purchased and put to use as depreciation in the first year of assessment, right? So here, starting 2023, SSE can claim a deduction up to 80%, and this will phase out over the period. So 80% in 2023, and maybe SSE bought another business equipment or maybe any other qualified purchase, it will be 60% in 2024, 40% in 2025, and 20% in 2026. That's the phase out, and it will stop as it reaches 20%. Mind it, the betterment in bonus depreciation is that there is no limitation, there is no cap of 1.08 millions or any phase out in that sense of 2.7 million, and it is not limited to profits. So it means that if I had a profitability like a taxable income of $500,000 and I had purchased a asset, business assets worth qualified business assets worth suppose $2 million, I am solely eligible to claim it as bonus depreciation. So I'll be eligible to claim depreciation of $2 million into 80%. So $1.6 million can be claimed. Whereas I had a tax profit of $500,000, so I can run into losses and there's no problem with that. So bonus depreciation makes a convenience over there that you can even go into losses as if there is no limitation, and that's the beauty of it. So the SSE may decide as per their own requirement and see what suits them. For fun facts, have you seen there are businesses who acquire automotives like SUVs also for their staff to give it to their executives, CEOs, CFOs. Why do they give that? Because they can still claim depreciation, right? And they're using that asset in business. So mind it should be used more than 50% in the business, and that's what the beauty of the methods are. So if you're using the facility in the business, making the business grow, or acquiring machines to make the business run faster and smoother, That's how IRS as well supports those small businesses and everyone to grow and excel in their business. For more content like this, please follow Learning Lane with Parnas.